overall picture, you see how the market is trading down, and they are simply lifting the liquidity here, adding. I think at last Friday, someone said, I think it was in our room, that the price is going to trade at that point here. Time is going to trade into 80, 85. That was the outcome, and it's simply based on this information here. Okay, guys. What do you think, making a break until tomorrow?
Hey Walter, this is Frank.
Hey Walter,
Yeah,
this is Frank
Frank.
again.
Hi.
On your volume spike settings, I was trying to duplicate the sweep, the volume spike that you had on that one at 67. That'd be probably 12.
22?
22.
Yeah, 12.
Yeah, 12:22 Eastern. So that sell spike right there, that volume spike. Did you change it to get that? Because I was looking to see.
I didn't change the sweep because this is not a sweep. I did change. The volume spike 300, 1, 4.
1, 2. Interesting. I can't get that one to show up. Yeah.
And the other thing I was going to ask
you is that if you go over to when it first came down to that 67 level earlier.
Give me you don't see this volume spike. That's really strange. That you should. What you can do following. Try following. Put a ratio to 1 and put a trigger volume to 200. And then you can
see if that gets it.
Yeah.
So 201.41.
So 201.41.
Yeah. It must be there.
It's going through and calculating.
It must be there. It might be that the data feed and the data quality differs. That we have slight differences, but it must be there. There's no excuse. You are running version 3 as well?
Yes.
It must be there.
As soon as it gets finished calculating. For some reason it is not showing up.
That's really weird, because we should have the same signals. We should have the same signals, and I don't. You are running. Are you running Rhythmic as well? Right? Yeah. You are running.
Yeah.
Can you make us screenshots here based on the ES and the configuration here? So just send me that over. It must be there. It must be there. Wait. What you can do, increase the duration to, let me say, 5 seconds.
Okay. Try that. And the other part I was going to ask you about is on the price dynamics line. If you go back over to earlier in the morning, when we get the first spike down to 67, so more a little bit later in the morning there. So right in there. So I just wanted to see on the price dynamics. Okay, good, because you're showing on your price dynamics.
Just a moment. I just want to get rid of this numbers here. Someone is.
I got it that time. I got it that time.
You got it?
Walter.
It's time. I think then it's time. Maybe you have to adjust it to 2 seconds and you will get a spike here. I don't know why that happens, but it might be the differences in data feed somehow. So that's here. You're talking about this one here.
Right. I was just trying to see. Right. I was just trying to see on the price dynamics the brightness of the line or the sell was much earlier versus when it hit down here at 67. It wasn't as bright as price came down. The selling wasn't as exhaustive. You know, over there at what 1745 on your chart.
Here.
Yeah, right there. Yeah, right there. Yeah. So the price dynamics wasn't as bright and as big as it was. And I just wanted to confirm and make sure that mine's picking it up the same way yours is picking it up.
You can even, if you're a little bit familiar with this kind of indications here, although it's as I mentioned, it's a challenge. You can even spot a divergence here because that was heavy selling here. That was really heavy selling, then heavy buying here. So and that was a little bit of mislead here, I must admit here. But it was very heavy selling. And when it comes to a break, because we don't know at that moment that if this is a low or if this is not a low, you have to disregard the rest here of the chart. But at that moment, we don't know if this is a low. So it's not a best advice to jump in here, but wait until this price dynamics. If you rely on that as well, you have the V delta. You have this. I think the stop run line with SI tracker is very similar. So it shows an divergence here as well, and you can spot even the divergence here because that was high volume, heavier, higher volume than it is here higher volume. So you see a very nice divergence. And if you don't want to jump in at the low here because there's a divergence between those 2 points, then wait until it turns green, and that gives you an additional idea that they are just buying from ask here and they are hitting. They're buying from ask and lifting the offer here. So because we have the divergence at those 2 points, the market goes up and it's signalizing, okay, buyers came in here or started to came in here. And the next level is the liquidity level at 47, 73 and 74.
Got it. Good. Thank you.
Not at all. Karen, you should. I think it's as I mentioned. Where was it? Let me see. Where was this volume spike? Where was it? I think it was here, wasn't it? Karen, please. Please. Well, excuse me.
I think it was at 10:22.
Yeah, you should try it with maximum. Increase the time. Increase the time to 5 seconds, and you should have it. Then you should have it. You should get it.
The 5 seconds.
I think it's a matter of time. It's not a matter of volume, but a matter of time. I don't know why, because that might be because of the delays or whatever might happen in the market. But you should find it. When you should have, first of all, the same signal. The only differences might be in the time. I have...
That's maximum.
Yes, maximum duration. Put it to 3 seconds, then it should appear as I have it here. Quite sure.
Okay, thank you.
Okay, thank you. By the way, guys, before I would say let's digest and let's see what's in front of us and then continue tomorrow. But what's here? What happens here, guys? Based on the relative liquidity in the book. And how is that informative for us?
may go down.
It may go down.
Yeah, it certainly looks like it's being, they're wanting to take it down to 46.65. But I would think you would have to get a shift with some other, I guess, some of the other liquidity down to kind of get it down there. I would
Yeah.
think.
You know, as I mentioned before, this is a language. What we see here is a language, and we should understand this language of market language, because suddenly something happens. So we see 65 came up. First of all, interesting is that this guy put the liquidity. Look here, put the liquidity at 66, and then they are. Yes, lowering this 65. Look here, what that's real time, guys. And as we are talking about this liquidity, we see a huge sweep. We will talk about sweep.
There's the shift down in liquidity.
And by the way, mind following. There was a shift down, not much, but anyway, it was one. And then when this happens here, you see what happens to the liquidity at 65. It was added on both sides. So we have 65, and let me just 65, because Bookmap aggregates data. Please keep always in mind, don't trust Bookmap, it aggregates data. 65, and they added liquidity above 65 and below 65 a little bit. You see this is orange, dark red, and yellow line here. And you remember we talked about that maybe here. The price dynamics turned red, and that was a fair assumption, that was a fair conclusion that the price might trade into the 65. So they're canceling at 80. And the next target could be and might be the 65 target, which is an institutional level 63 as well. That might lead to a trade into 65, then 63 as well. Can you point TradeFinder liquidity meter is different than BM Global and liquidity meters? What is liquidity meter Bookmap? I'm not sure.
I mean the book, the volume. You have a Global Plus license, right? So and on top of, but right next to the book,
that's order book imbalances. These are order book imbalances. So these are order book imbalances. This is not a liquidity meter, they call it, but they are showing order book imbalances. We will talk about tomorrow. We will talk of order book imbalances tomorrow. But that this is not a liquidity meter in the sense of a liquidity. It simply shows
the balance, the order book
order
imbalance.
book imbalance.
Okay,
Okay, guys. How should we proceed? Do you have some time? Should we add another hour this afternoon, your time, US time, this evening here in Europe, to discuss the order book imbalances?
I don't know, Walter. It's 7:30 in the evening,
Yeah,
my time. And I have 5 daughters, so I'm okay with another half an hour, but an hour might be a bit overextended.
Tomorrow is fine as well. I know it's overwhelming information. I have to go in. I have to go into myself and. No, let's do for the next minutes, and we can. No, I have skipped that one. So sorry. I think discussed the most important parts. But just let me add for the next few minutes something you may think about what's in for you tomorrow, and then let's continue tomorrow with the icebergs, and let's come to the strategies. What I recommend. I can talk all the week about this interesting indications pieces of the market, but it's really something it's too much for everyone today. Yes, great strategies are important. We can do a recap, but very briefly, you can please go through this information. Order book imbalances. Besides the liquidity, just one sentence. Besides the liquidity, the order book imbalances are important as well, because the price seeks liquidity and the price looks for order book imbalances in the book. Where is the highest liquidity located? And if you're on with NinjaTrader and other charting programs, you will have order book imbalance indicators as well included in, for example, NinjaTrader. The meaning of the order book imbalance is that it shows us where the biggest imbalance is. I mean, what I'm saying by that is that we see where the imbalance is or might be in the book. But in some, I don't find, let me see if I find anything. Yeah. Oh, no. If I find something today, no. So the Trade Finder is measuring the order book imbalance. It shows you with an triangle where the market might trade to or going to, but I don't see anything really meaningful right now. Let me see the NQ. Yes, here, for example. In this case, although it's really, I would be very cautious with thin instruments. You see this triangle with this 30. That means to the upside on the ask, based on this liquidity, there is more pressure to the ask side. There's more pressure to the ask side because the market seeks liquidity, and that's extremely important to you, to know for everyone. Market seeks liquidity. Look here, this is another liquidity tracker, imbalance tracker, who points to the downside. On the downside, there's more liquidity than on the upside, as well here. So that means the imbalances in the book are extremely important to understand where the market might trade to. On your slide, you have an example that is based on last week, don't know, Thursday or whatever. You see what happens here. This is a perfect trade. That's the sweet spot. If you are patient enough to understand and to find these sweet spots, you will be rewarded immediately with an extreme risk-reward ratio first, and then maybe an outcome which gives you 10-15 points back. That's an extremely nice picture here. That was, I think it was last week, I think Wednesday or Thursday, I don't know. And that was the pre-market. The pre-market traded into liquidity. Then the imbalance tracker came up and signalized, oh, wait, there's to the upside, there's more liquidity. Although, I mean, that's really nothing magical because we see that already here at this level. And in the price dynamics plot, you see only buyings. Then the pullback came back here. But when you are entering the market at the lowest possible point, you will understand that the market is or will trade towards this liquidity. That's what I calling a sweet spot. And the imbalance tracker, don't ignore it. Put it on if you are trading ES, it's much harder to have them on chart if you are looking for QQQ or SPY. I will show you that, because it is extremely hard to find nice liquidity edges in SPY, in QQQ as well, and therefore the liquidity tracker is meaningless in this kind of environment. But for some nice high liquid markets like ES, we can use it as well for the treasuries. So the order book imbalance is important, because it points to the side where the biggest or the most liquidity is. And as mentioned, the liquidity is a attractor, repellent, or supporter. It can support a price, it can attract a price, but be as well as act as repellents, be repellent to the price. As at liquidity levels, institutions, market makers, algos are seeking to transact, and icebergs are used to provide liquidity along the auction, not necessarily at swing highs and swing lows. One last point for today I will stress is, if you don't see liquidity, that's as well important as well. So where we have two clusters in a chart normally, there where liquidity is and there where no liquidity is, and that's important as well. Okay guys, that's it for today's. Tomorrow we will talk about sweeps, stop runs, volume spikes and absorption, and then we are starting with the strategies. It gets more exciting to talk about icebergs and sweeps tomorrow. We'll get a little bit more dive into this structure of those sweeps and icebergs, and to discuss the icebergs, and then we will go to the options, and finally taking all this together into the strategies, the correlated markets, which is where you will see extremely important to know. I will show you what maybe you haven't seen before with the correlated markets, and we will take them as a main argument for us when we see what happens and how to trade. To wrap up, yes, I'm going to stop the recording, and I have to not transact, but I have to make an MP4 file, and then I'm uploading it. You will get the link tomorrow for the recording. To wrap up, we should gain.
Yeah. But can I ask one question? It's about the slide before. That's one of the big mysteries for me using Bookmap, where there's this zone where there's no liquidity. And yes, this one. And this is one of the most fascinating things for me, because I understand the idea of that liquidity is a big magnet, but I can't tell exactly when liquidity acts as a magnet or when it works as a deterrent, because in some cases it approaches the liquidity, and then just before it hits the zone, it goes into the big black zone, like the no liquidity cluster. And this makes no sense, because the liquidity is then in this example below, and above there's no liquidity at all. So what is the phenomenon that explains this situation, and do you have anything that might shed a light on this?
You mean because you are not sure that let me just repeat, I'm not sure if I understood you right. It's hard to understand when the liquidity the price is attracted by the liquidity as a magnet, and trades into liquidity, and there is no liquidity above or below.
Yes, and sometimes it just goes on and it eats the liquidity, and then it makes it move. Yeah, of course we can understand this all, because the liquidity has been eaten up then. But for example, in the screenshot that you have in front of you right now, in a lot of cases, it just before it reaches the liquidity, it goes straight up and goes into the black zone where there's no liquidity at all, and that doesn't make sense because there's nothing to gain there because there's no liquidity. So why doesn't it go through then? And that's one of the big mysteries for me.
Yeah,
Do you
I
understand what I
you
mean?
mean. I understand very well what you mean. I don't have a right answer right now. I don't have the right answer right now. I understand what you mean. I mean, it could be, the first thought I had when you asked that was that it is when the market trades into liquidity here, and
Yeah.
it could be a kind of short squeeze. Let me see, short squeeze or taking profits here. It depends on. I mean, this is a little bit the wrong picture. Maybe we will see the right pictures the next days here, or maybe another picture where we can come
Yeah.
back to. But when that happens into liquidity, it is profit taking. Let's say it's profit taking. What happens? The price goes down into this liquidity area. Some of them see, a lot of traders, I suppose, see this liquidity area. They are saying, okay, that's my target. And by the way, I'm act the same way and say, okay, I'm taking my profits here. Then some are, yes, some of the traders might see that the price is not coming back, and they jump on and try and drive the prices up. But there's no liquidity anymore, so there's nothing. Most of the, I bet, I'm not sure, but I bet. Let's see if we can find an example the next days here. I don't see any example. Let me see here.
Walter, can I give it a try? Most likely, we have aggressors, not enough liquidity there. So that means price. There was a that means there was a level where aggressors were able to go and get a fill to the upside, even though there is no liquidity there. That means you can see it, I think the indication on the liquidity chart would be you will see very less amount of aggressors.
Yeah, what I would like, Reimer, I don't have the perfect answer for you right now on that. I would like to see that in real time and real life on the chart to understand a little bit better the action, because this is a really picture book. Let me say that's a picture book, order book imbalance, because there is nothing above, so they are trading all down. But that can change because they are trying to hit this level here and then get a fill. It is an accumulation at this point. You can see, as you showed in the chart, maybe 2 days ago that was a low as well, or yesterday's low, whatever. And they accumulate it, and they start to lift the price or up. To lift the price up. And that means if they are starting to lift the price up, you will see liquidity comes up here and here and here and here. So suddenly this dark area or this black area here becomes more reddish or
Correct.
because they are seeing, okay, that's the bottom, and that's the bottom. So they're accumulating. It takes maybe 20 minutes or 10 minutes, 20 minutes. Then they're accumulating, and then they're trading back into this dark area. Then you see suddenly liquidity comes up. I don't believe, I'm just asking myself, I don't believe they are just immediately go up there, because we have a liquidity as an which acts repellent. So they're putting the lid on the pot here. You see this very, very small.
Yes, I know.
So they want to trade,
I know.
They want to trade
Yes.
lower. So that's the indication they are not going immediately into what is this, the VWAP or whatever area, no liquidity cluster area. They need time. Maybe they want to transact, but I can't remember. Maybe I don't have the perfect answer for you, because I don't believe that they are just leaving this area. I mean, it can happen. They are just breaking through this liquidity area.
No. In this case, there is a line of liquidity above the current price, but there are also situations where there is only black matter above the price, and those situations those I'm referring to.
I don't have.
Yeah, but
I don't have the right answer right now. Let's see whether we can spot something tomorrow, Wednesday or Thursday, and we can take it as a discussion base for your question here.
That would be called flipping the book now,
Sorry?
Walter. That would be called flipping the book.
It's going. It's calling flipping the book, but we have to see that first. So. I don't, Eve and Raimo, I don't have the right answer right now. So let's see if we can spot something the next 2 days or 3 days, and then let's start to discuss it again. Okay. Just
good.
for the conclusion. The conclusion today, we learned a lot about liquidity, and that's the main part. You see how this is really flipping. TradeFinder is, from my point of view, the best tool you can see a spot on the chart what's really happening here. You see how this sweep happened, and now they are attracting 65 here. This is the next attraction point. Order book imbalances are important for liquid instruments. I'm talking about liquid instruments. For other instruments, it's not relevant because it's meaningless. For example, when you look the QQQ, I think it's QQQ. Yeah, you see that's it works, but you see this really tight band here, really tight band around this price action. It works, but it's not perfect. That's really something I just have on my chart here. I'm relying on other significant areas where I can spot the swing highs. That's something with imbalances which are not suitable for instruments where you don't have a very clear picture of instruments here, like the HYG as well. No. So yes, thank you for the first day. It's demanding. I know we will talk tomorrow about sweeps, about icebergs, and we will come to options, and then starting off to the strategies, and then seeing that we see the strategies running and in action on Wednesday and Thursday, and to discuss all open questions you might have here during the day. Let me go through the questions. Pattern. If you hit a wall of 10,000 lots, I would assume that would pattern. That the point is what you are talking about. You are talking about ES, or you are talking about a stock. Okay, because 10,000. When we see 10,000 here, we will talk about that. I changed my numbers as well here. When we have
Walter, I was just using that as an example. Where the person made the point that sometimes liquidity acts as a magnet, and sometimes it attracts and sometimes it repulses. And I was just using the 10,000 lots as an example of an enormous wall that I would, if I ever saw something like that, I would expect it to repulse. Earlier today, I think there was an iceberg of like 2,000 lots that repulsed for a while before it was beaten.
We'll talk about a very fascinating pattern, guys. I call it business done. That's so fascinating. It works. I would say even 80% of all time, and maybe we see something like that here, which is really repellent, and we'll call it a business done, because they are trying to protect here, or to not protect, but to resist. Then they are off because the price fell down. The price is coming back. They are trying to resist again. Yeah, 10,000 might be a big number, but in pattern, I have seen 10,000s of contracts here on the resistance of one side. And if they're in fury, then they are simply taking all 10,000. So That's never an guarantee. But the more red we see, the more they are repellent to this level, the more the price. The less bias they find to go through this level and eat every single order from the ask here. They are not eating every. They can because there are no buyers, and we can. By the way, we can see this repellence of the markets when we see a big volume traded here. Let me say that was a big volume here, and then they are simply running out of steam, and that makes the market more vulnerable to the downside. Maybe they're trading to 65 and coming back here, but 10,000, yes, that could be I don't know whether I see, but 2,000, 3,000, 4,000 they have been taken out as well during the last month when you watch this day in and day out. So yeah, that it could happen. I mean, you have to see an Apple. I don't know whether I have Apple here. Let me say, I don't have Apple here. You need 200,000 to consider that a really good resistance for shares like Apple. We will have enough time, hopefully, to go through all these fine details. I just wanted to make sure that we are on the same boat. We are on the same level with the knowledge when we are talking about liquidity, when we are talking about sweeps and volume spikes, and when we are talking about icebergs. That's what we should have the same understanding, and that would be very, very beneficial for all of us to understand what to speak the same language, and then to watch the market from the hopefully very similar perspective to understand what the market is doing. But for today, I think we did a lot of this stuff. I think you are overwhelmed to a certain extent. I would like to say, digest the information. Let's start tomorrow fresh and concentrated, and let's continue this discussion tomorrow. I will try from my side to keep it so crisp and so short as possible, just to come to the strategy sections, because I believe that we have a huge advantage in the strategies. But when we're talking about sweeps, then Raymond maybe understands anything else than I understand, and you will see maybe my other colleagues as well understand that stop runs or volume spikes. So just to make clear what we are talking about, have the same terminology what we are talking about, and then let's start with the strategies, because I strongly believe that what you will see during the next days, it's extremely helpful for your own trading. So thank you very much for the day, guys, and we meet tomorrow, same time, 9 a.m. Eastern time. That means in Europe, 3 p.m. European time, UTC +1. And please notice or make notices, send me emails, or put this in the room here for tomorrow to discuss, keep the discussion ongoing on that, what we are discussing here. Thank you very much, and have a great afternoon and have a great evening together. See you tomorrow. Bye-bye.
Thank you, Walter.
Thank you.
Thank you,
Bye-bye.
Walter. Bye. Thank you.